presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compak Market Wrap Weekly YouTube Update. I'm Mo Ansari, President of Compak Asset Management, and this is the morning of January 22nd, 2024. Markets new all-time highs. I love saying that for the S&P 500. That's where we closed last Friday. This morning we made new highs again. NASDAQ, Dow also at new highs. Always wonderful to see that. Don't forget, again, all the information that you see here and the podcast and the weekly newsletters and all of that information is there. Simply go to compak.com/media and don't forget to subscribe to this so whenever I put out a new YouTube update, you will be notified and you can get that. It is absolutely free. Looking at the markets, new all-time highs for the S&P. It gained 1.19% last week and got above the 4,800. I'm going to take a look at the technicals. That is good. The Dow gained 0.76 and the NASDAQ was up 2.26%. Nice week to the upside. The Russell's still struggling a little bit, down 0.33 for the week last week, but today having a good day, and I'll talk about that. It's right at resistance. Hopefully we can get above that and start the fifth wave to the upside on the small caps. Looking at technology, again, leading to the upside. Year to date, it is the number one sector, and for the week it is also communication services, also second best for the week and second best for the year. And then we get down to utilities. All the other ones that were leading previously have dropped to the bottom side of it because interest rates were up last week. But I thought, as I showed you in the chart last week, we were right up against resistance. Seems like we've come up, tested that resistance, and now rates are starting to come back down. Oil was up because of the escalation of the war in the Middle East is starting to get a little bit more, starting to spread a little bit with attacks on U.S. facilities in Iraq and the Houthis doing what they're doing in the Red Sea. That is definitely causing some anxiety in the oil market, and I think it's temporary, but it is definitely causing, the market is up quite a bit today. Interest rates were down, fixed income yield was coming down, 10-year treasuries were down from, were up slightly from the week before. We hit the 4.15. 4.2 was the resistance that I was looking for. We got there, started to fall back from there. Looking at the Mag 7, they are definitely starting to, again, lead to the upside. Last year, they gained 76% in 2023. You're looking at 2024, as of last week, Mag 7 still leading, the Magnificent 7 up 0.4 and the NASDAQ up 0.3 for the year. S&P also up 0.2 now, getting to the positive sector, and I like to see it close positive, but the big news is going to be this Thursday and Friday. Thursday, we get the first estimate of the fourth quarter GDP from last year. Expectation is 1.7% GDP growth. On Friday, we get the PCE, the Personal Consumption Expenditures Index. That's the inflation, that the number that the Fed looks at. It's inflation at the wholesale level. So those are the two numbers that are really going to give us an idea what the Fed is going to do going forward. Looking again, retail sales were up 0.6% month over month. Retail auto sales also up 0.4% month over month. Again, first estimate GDP coming out Thursday. Then we get market PMIs also, the prelims. And then we get the big number is the PCE. That's the inflation at the wholesale level. That's the inflation number that the Fed pays particular attention to. Looking at the technicals, we broke up above the 4,800. We're trading at 48.53 this morning, gaining another nearly 0.25%. Looks like we're extending the third wave. This was looking like this was the third wave top. We are getting a fourth wave pullback, but this seems like we've seen an extension of the third wave to the upside. Now the targets on the daily charts become somewhere around about 49.75 to 49.80. Weekly charts, each one line is 1 week of trading going back a few years. A long-term target is still 5,000 to 51.50. Are we going to go there first, or are we going to get a pullback? we'll have to wait and see. Resistance on the daily charts or support on the daily charts still at the 20-day moving average, 47.56, 50-day moving average, 46.48 is what I'm looking at. NASDAQ looks like it's headed to that target for the fifth wave, which is 15,475. We're at 15,369 this morning. So we're headed towards that target. Support now is 20-day at 14,920, and then the 50-day at 14,550 is what I'm looking at right now. Weekly charts, again, the all-time high, 16,212. That becomes also a target on the upside on the weeklies. Long-term weekly chart, we're looking at something around 17.1 to 17.7. That comes from this, the Fibonacci projection. From this high, that projects to this number up here. So we'll have to wait and see if we can get there. Interest rates are critical. We got up to the resistance area, 14,615. We hit it on Friday. Today we're starting to fall back down a little bit today at the 200-day moving average is where we are, which is 14.06. We're at 14.09. Well, 14.16 is the number now that we have to watch. Looking at the crude oil market, big update today, up nearly $1.78 a barrel at 75.77. Looks like we're headed again towards that 78 number, somewhere right around there, or 76 number is what we could see another test of that, but I think somewhere right around here, 200-day is 77.71 on the crude oil market. Small caps, looks like third wave high right here, fourth wave pullback we've seen, came down, tested the 50-day moving average. Today we gapped up, so we're looking good. We need to get above 196. We're trading around 196.15 today. 196.43 is the 20-day moving average. If we can close above that, that'll clear us. Then we have this gap right here that we have to watch. If we can get above that, then we looks like somewhere around 208 to 210 is the target. That's the Fibonacci projection from this high for the fifth wave high. Looks like we're going to head there. So small caps are something to watch and see what happens. Those are my thoughts. Those are my views. Again, for a detailed conversation about the markets, Javed and I will join you on the podcast. Make sure you be on the watch out. We're going to do that today. It'll be posted. So if you're a subscriber, you'll automatically be notified, and you can listen to the podcast on your iPhone. It'll be directly downloaded to your iPhone if you have the app, which is free. You can download that. Hope you have a wonderful week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moeez Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.